silver just exploded past $54, just cents away from an all-time high. China's driving the surge, traders are calling new records, and the entire precious metals market is waking up. This is silver's moment, and it's happening fast. Peter Schiff wrote, "Silver is back above $54, less than 25 cents away from a new record high. It's already up over 16% since hitting its low 2 weeks ago. Forget about Bitcoin. If you want a faster horse than gold, take a ride on silver. Hi-ho, silver." Now, that's classic Peter Schiff, confident, bold, and focused on metals. What he's pointing out here is momentum. Silver has moved 16% in just 2 weeks. That's not small. And when Schiff compares silver to a faster horse than gold, he's highlighting volatility and upside potential. Silver tends to move quicker than gold when the trend gets hot. Ottavio Costa added, "Silver is about to enter a true price discovery phase, in my view. Here's a reminder that this is all happening while the gold to silver ratio remains near historically high levels. Game on." Costa's observation is fascinating. Price discovery means the market is entering uncharted territory where previous highs may no longer act as resistance. And that gold to silver ratio staying high means silver might still be undervalued compared to gold historically, suggesting there's still room for movement. Gold Predictor said, "Silver continues to surge toward long-term resistance near $55, breaking through key pivot zones at $28 and $34. A decisive breakout from the blue region could mark the start of a powerful rally." This post adds some strong technical context. Those pivot zones around $28 and $34 were big resistance areas in the past, and the fact that silver has sliced through them shows serious strength. That blue region likely refers to a technical zone of consolidation, and breaking out of it could indeed signal momentum continuation. Bar Chart reported, just in, silver jumps to new all-time high. Straightforward and powerful, that headline alone tells the story. Silver isn't just recovering, it's rewriting history. Rashad Hajiev commented, "Silver has been rallying more actively following the recent sell-off. While gold needs to rally 8.5% to reach its all-time high, silver requires only 5.5%. I think gold to silver ratio is about to break down a 40-year key support level." That's a data-driven insight. Rashad is emphasizing how silver is closer to its record level compared to gold. If that gold to silver ratio breaks down as he suggests, it means silver could outperform gold in the near term, at least from a relative performance standpoint. The Kobe C. Letter wrote, "Silver prices are quietly up plus 11% over the last 5 days, even as the government shutdown is about to end. If the $2,000 stimulus checks actually happen, momentum is going to accelerate quickly. Gold and silver always know first." That's an interesting observation. Silver's strength over just 5 days shows how fast sentiment can shift when liquidity or stimulus talk enters the picture. The mention of gold and silver always know first highlights how these metals often react early to changes in economic expectations or government action. It's not a forecast or a guarantee. It's a reflection of how sensitive precious metals can be to fiscal and monetary news. The Great Martis wrote, "Gold, silver. Silver leading the way, a cup and handle pattern looks like forming. Gold lagging, its rounding bottom should replicate silver's move. The tricky part is the handle, as they can overshoot and slant higher or slant at resistance. In coming days, we will know." Now, that's a classic technical breakdown. What Martis is pointing out here is a cup and handle pattern, a formation that often appears when a market is consolidating before a potential move. He also mentions gold's rounding bottom, which usually suggests a gradual shift from selling pressure to renewed strength. The key takeaway is not a prediction, but an observation. Silver's currently leading the move, while gold could be following a similar setup. The final line, "In coming days we will know," keeps it balanced and open-ended, reminding us that market structures don't guarantee outcomes. They simply give us possible signals to watch. According to TradingView, silver recently climbed more than 1% to above US $54 per ounce, contributing to a week's gain of about 12%. Key drivers behind this move include expectations that the Federal Reserve may cut interest rates, which tends to boost precious metals like silver. Supply concerns. For example, India's wedding season is driving demand, and there's talk of possible U.S. tariffs on silver. The U.S. Department of the Interior added silver, among others, to its critical minerals list, meaning the metal is now viewed as important for national security and economy.
Macro liquidity explained. China is driving the silver breakout. SHFE futures, when converted to USD/ounce, are already trading near $54.05, leading COMEX by almost 50 cents. Shanghai is printing fresh all-time highs while the West is still waking up. This isn't a lag, it's China setting the global price. This is an important angle. It suggests that China's Shanghai Futures Exchange is now taking the lead in price discovery. When Eastern markets move first, it shows how global demand and liquidity are no longer just Western-driven. Silver's price leadership may be shifting east. The Great Martis said, "Silver, first level of resistance approaching fast. $52.70. A break above and $54.00 will come quickly. I'm expecting a short pullback at the 52.70 level before all-time highs are tested not too long after." That's a trader's perspective, clear resistance in short-term pullback zones. It shows how even during strong uptrends, the market breathes, hitting resistance, pulling back, then making another run. Rashad Hajiev added, "Silver is up 4.5%, Silver Miners SIL also up 4.5%. SIL should have added 8 to 10%, but investors continue to remain in disbelief." While silver keeps rising, most expect correction or sharp sell-off, which is why miners are not performing to their potential. He's pointing out the sentiment gap. The market's rallying, but investor psychology is still cautious. That disbelief phase often happens in strong trends, where prices move first and confidence catches up later. Nike Shield shared, "In 3 days, gold plus $200 plus 5%, silver up $5 plus 11%, platinum plus $70 5%, and palladium plus $90 7%. You just can't keep a good thing down below $4K and $50 for long. The precious playbook is all tied to liquidity and the prospect of further government stimulus." That's a macro snapshot. The entire precious metals complex is moving together, driven by liquidity, stimulus, expectations, and capital flows. When multiple metals rally in sync, it often signals deeper shifts in global money trends. Disclaimer: this content is for informational and educational purposes only. It does not contain financial advice or recommendations to buy, sell, or trade any asset. All viewpoints mentioned belong to their original authors. Always do your own research or consult a licensed financial professional before making investment decisions.